or so they tell us. This is a program where we discuss what's hyperbole, what is reality. I'm Peter Zalewski, condo consultant, expert witness, founder of Miami Condo Investment Club. I'm joined here by my partner, my co-host, commercial real estate agent, no one else but Oscar Musibay over at Lee and Associates. Oscar, how's it going today? Oscar, where are you? You didn't show up. He stood us up, everybody. It's Thursday afternoon, so we're supposed to be talking about what are the latest trends going on in South Florida, what's going on in Miami, and Oscar's a no-show. That's all right. He never has anything interesting to say. Anyways, he says I'm the chatty Cathy. Let's see how chatty I can be today. What are we talking about today? Well, I got something you guys probably aren't accustomed to. We are going to talk about black swans. We're talking about gray rhinos, and we're also talking about vultures. This is not going to be a podcast about what's going on down at the zoo. It's not going to be a conversation about what's going on at the national parks. No, we're talking about the financial markets. We're also going to tie it into how it relates to the South Florida condo market. So let me get started with it. Let me kind of lay it out, and we'll take it from there. This is going to be kind of a tongue-in-cheek show with some cheap shots at Oscar because he's a no-show. But what we're going to give you is real-time information about what's going on in the market, what's coming from Wall Street, and what's percolating down here to the Tri-County, South Florida area of Miami-Dade, Broward, and Palm Beach County. Let's start off first with some terms. Black swan. What is a black swan? Black swan is a term in the financial markets when something happens that's unexpected. Think about an explorer back in the day. They would go out wandering and they know what a swan looks like, and all of a sudden they stumble upon a black swan. How do you anticipate it? How do you expect it? Well, that's what a black swan is in the market. What are some examples of black swans? What kind of impact do they have? Well, if we all go back to February 2020, maybe March 2020, we had a black swan. Black swan was the pandemic. The pandemic was a black swan. Nobody could anticipate what was going to happen, and you didn't know what the repercussions were going to be. I remember going back to 2020 when they announced that the National Basketball Association, the NBA, they were actually going to cancel some games. That suddenly became reality, and then we all knew what happened after that. I remember having lunch with somebody shortly after the black swan being announced, and people didn't really know right away, because if you guys take yourself back then, some of it was up in the air, some of it was questionable. You didn't know what really was going to go on. But lo and behold, where did we end up? Nobody could anticipate it. We were going to end up in a situation where today we're still paying for it. Some people overpaid. Some people came down in 2021 to South Florida. Came in 2022. They came in 2023. Why? Because big bad blue states up north, they were mandating you had to wear a mask. Florida Governor Ron DeSantis said, you don't need to wear a mask. Come on down. It was a shrewd economic move. Drove a lot of people into South Florida. Companies allowed you to work from home. You can work from home. So if you're getting paid out of New York, you're getting paid out of California, Silicon Valley, why not come to Florida? Supposedly it's cheaper. People came down. They got into bidding wars. They bid up the pricing on condos. And they thought that this was going to be the forever condo. But wait, something happened. Guy called Jamie Dimon over JP Morgan up on Wall Street. He says, you know what? We need synergy. So what happened? Suddenly you had to go back to the office once a week. Then it was twice a week. Then it was 3 times a week, 4 times a week, and Friday was off. Now everybody's back in the office. So those people who came down here and bought a condo in 21, 22, 23 and bid up our pricing and created this whole boom, if you will, with new condos. Now many of them are stuck up in New York or Silicon Valley. Remember, AI came about, everybody. There was a deal. There was an announcement between Microsoft and ChatGPT to go ahead and partner up. The AI game was on. That was about 2 years ago in 3 years ago. 2023 is when that happened. So all of a sudden, people who were doing tech, they had to go back out to Silicon Valley and figure out what was going on. Ultimately, they'll probably all lose jobs because of AI, but that's what happened. So they had condos down here. They thought they were going to be the forever condos because of 21, 22, 23. Now they're back up in Silicon Valley, or they are on Wall Street and they're trying to rent their condos and they're not doing very well. That is an example of a black swan. What was another black swan? Lehman Brothers. We all remember September 2008, large investment bank. It goes belly up. Once it did, triggered all kinds of problems, including, some of you remember this, an insurance company called AIG. What does insurance have to do with mortgage-backed securities and foreclosures in South Florida as well as around the country, if not the world? What does Iceland have to do with mortgages in the United States? Ireland? What do they got to do with it? Well, this is what happens when a black swan hits. Suddenly something happens and there's all kinds of stuff that plays out. Something gets broken. Once you kind of shake the cage, something might break. That's what a black swan is. So let's go over to a gray rhino. Gray rhino is a term that came up roughly about 12, 14 years ago or so. It was first announced by an analyst, an expert, an economist who came up with the term. They were given a presentation over at Davos in Switzerland. When you get all the fat cats together, all the bankers, the investment bankers, the CEOs, they all get together and they all talk about what's going on in the economy. So this presentation was made referring to a gray rhino. What the hell is a gray rhino? Gray rhino is something, if you guys ever been on safari, I have, I'm fortunate enough, I went on safari. You're out there, you're just watching for stuff to happen. If you ever want to look at a rhino, I mean, maybe go out to, Metro Zoo or Miami-Dade Zoo, whatever they're calling it now. You go out there, you see the rhino, it's not doing it. It's sitting there, it's eating. It's got that crazy, the way it chews. But when that rhino charges, woo, watch out. That's what a gray rhino is. Gray rhino is a situation where everybody's seen it. Nothing's happened, so you're not really worried until it charges, And then finally we get into the vulture. What is the vulture? Well, vulture's a bottom feeder. Vulture is a cleanup process, if you will. Vultures don't kill anything. They come in and they clean. A lot of people suspect that vultures are the ones that are killing prey, or killing, farm animals, or they're killing animals out in the wild. No, they're cleaning it up. They're picking the bones. The vultures are the bottom feeders that come in and clean it up after the situation. So how does that all have to do with real estate? Well, we got a situation going on right now in the United States economy, as well as the global economy, that somehow, some way, is going to trickle down to South Florida. Remember, everybody, Miami-Dade County, we're 55% foreign born. 55% foreign born. Somebody invites you to dinner, chances are, more than a coin toss, they're probably were born somewhere else. We have a big international community here. We have cultural affinity. Somebody comes here, they buy a condo, they invite their friends, family, they come here, they like it, and so on and so forth. This is the way it goes. If you look at the Tri-County area, 6.2, 6.4 million people or so, 42% foreign born. We are internationally connected. What's happening with the euro versus the dollar? It has an impact. What happens with the Colombian peso, the Argentinian peso? Could be any, the Indian baht. It could be rupee, I should say, the Thai baht. All of that could be impacting here. Why? Because we're such a diverse community. We are a place where we peddle condos, we peddle real estate, people from all around the world. So we have to pay attention to what's going on up on Wall Street, what's going on in the halls of Washington, what's going on in the White House. So how does this all kind of tie in together? Well, we got a little situation with a place called Japan. You say, where is this guy going? They're talking about gray rhinos and vultures and black swans, and now we're talking about Japan. Well, hear me out. Here in the United States, we like to take cash advances. We like to borrow. Our system was based on borrowing. We borrow. It goes back to the 1920s, the 19-teens. How so, you ask? Well, first lending that was really widespread in the United States, according to a book called 1929, written by a guy called Andrew Ross Sorkin. Check him out. He's an anchor on CNBC in the morning. So, teens, cars are around. General Motors, in order to sell more cars, they provide financing. And you know who follows with providing financing up to that point? It was immoral. You don't take financing. You gotta work hard. You pull yourself up by your bootstraps, and you go out and you buy it on your own. That's the American way. Well, General Motors says, we're going to need to get some financing going so we sell more cars. And then you know who follows? The predecessor to Amazon. We all know Amazon. You get on your phone, you get on your app, you order something, it gets delivered. Predecessor was a company called Sears Roebuck. We still got a location over here in Miami, right across the street from the Gables, on Douglas Road in Coral Way. Still standing. Eventually, they're going to knock it down. They're going to build a bunch of rentals. Shout out to RK, who owns a bunch of the retail space. That company owns a bunch of retail space on the Barrier Island in Miami-Dade and Broward County. And Sears Roebuck. They used to send you a catalog. You'd order something. You send your money in. They would deliver it. They provided financing. Who followed? Then you had Citigroup. Today's Citigroup, they were providing financing so you can buy stocks on, guess what? Margin. Anybody who plays the stock market. You go out there, you put some money in, they give you the ability to buy 2 to 1. If I got $1 in, I got $2 of buying power. You know what they did back then, Citigroup? The lead up to Black Friday, 1929, stock market crash ultimately led to the Great Depression. What did they do back then? They gave you 10 to 1. You put $1 down, you can buy $10 worth of stock, if you will. So that's the game, the way the game was sort of working. That's the way the game was sort of playing. So we have financing around. Financing is ultimately what leads to real estate, leads to housing, leads to everybody feeling like they're prosperous. When interest rates go down, housing goes up. When interest rates go up, housing goes down. This is the way it sort of all works in together. So what does this have to do with Japan? Well, we like to borrow money in the United States. Our biggest foreign purchaser of debt is Japan. Japan. Japan's got a problem, though. They don't really have the natural resources. They don't have oil. They don't have natural gas, and they need to import a lot of food and other products. So what do? They produce products that are high-end, whether it be electronics or anything else. Maybe they own the movie company, stuff like that. And what do with the cash? They go ahead and they buy what they need. They're able to import it. So everything is rocking and rolling. They're doing what they're doing. They got a contracting population, but everything's been stable. Then, 28th of February, United States decides it's going to attack Iran. They hit Iran, and what happens? We realize, wow, 20% of the oil supply of the world, including natural gas, including fertilizer, it's coming through that little strait, that place called the Strait of Hormuz. Yeah, I can't even say it. Yeah. So what does that do? That jacks up oil prices, jacks up natural gas prices, creates all kinds of issues related to fertilizer. Japan's a country that needs to import because the prices have gone up. Price of a barrel of oil, $70 is what it was roughly before February 28th, 2026, and the attack against Iran. What is it today? What's coming in about $85 or so, 90. It pushed 120. So if you're importing product, that means it might be a little bit more expensive. We all know how expensive it is here, and we are an exporter of oil in the United States. We know $4 a gallon gas. Nobody's happy about it. Nobody's happy. Just imagine if you're in Japan, you got to bring all this stuff in. Well, as that's going on, Japan's saying, we need to sort of calm our people down. We need to make sure that everybody's, getting a fair shake. So Japan's saying, okay, what do we have? If we need to raise money, what do we got? We got U.S. bonds. We have U.S. debt. Why don't we move to sell it? We'll sell it. We'll get some cash. We're able to buy our currency. We'll make it stronger. And therefore, when we bring stuff in, it's not as bad. Well, the United States doesn't like that. Japan is the biggest foreign buyer of U.S. debt. So what does the United States do? This week, what did they do? Treasury Secretary Scott Bessent, they made a move. They're looking to provide finance to Japan. Japan will basically lever its debt so it doesn't sell its bonds. The United States doesn't want Japan selling bonds. Why don't they want them to sell it? Because ultimately, the United States will have to, in order to sell their own bonds to fund this $40 trillion deficit, have to go at a higher price in order to get people that, rather than buying the Japanese bonds, they can go ahead and buy the United States. And I'm not trying to make it too complicated, but basically, the United States is backstopping Japan because they want the Japanese people to feel as if they're getting a fair shake. They need a stronger Japanese currency, which is called the yen. And if they don't get it, ultimately, it's going to lead to higher interest rates in the United States. So we are right now on the brink of something that could be pretty interesting. Now, how does that tie into a gray rhino? The gray rhino's been standing here for quite some time. The Japan situation with the U.S. owning, or Japan owning all of this U.S. debt. Same thing goes with China. They're right up there. If any of these countries move to sell, that ultimately is going to mean higher interest rates in the United States as well as the world. How do you track it? There's something called a 10-year treasury. Everybody can look it up. Look up the 10-year treasury. That's going to drive all interest rates. You got a credit card, it's coming off the 10-year treasury. You got a car loan, 10-year treasury. You got a mortgage, 10-year treasury. It's all based on 10-year treasury. Where's the 10-year treasury today? It's coming in at 4.7, 4.75, somewhere right in there. What should it be? It should be about 4.1, 4.2. So what does that mean? When interest rates go up, housing goes down. When interest rates come down, housing goes up. We are on the wrong side of the trade. This is a situation that President Trump is well aware of. How do I know that? Because he wanted Jerome Powell, the Federal Reserve chairman, guy he handpicked. He wanted him out because Powell would not cut interest rates. Why would you cut interest rates? Get housing going. Simple as that. Everybody knows we're in a housing freeze, according to Home Depot. Home Depot, that place where you go and you're able to buy your supplies to do your own work. A place you used to go to pick up a day laborer, but then the boys from ICE came showing up with the masks in the van and disappearing them. So I don't know if you can really get it anymore. But Home Depot came out with their numbers and they said the housing supplies are not doing as well. They're not doing as well. So that's not necessarily a good thing. Why? Interest rates are too high in order for people to move. Mortgage rates, if you listen to Wall Street, they should be coming in with a 5 handle. 4 handles even better. Remember, you lower rates, you get up housing. Unfortunately, we're getting closer to 7, everybody. When you got a 7% mortgage rate, nobody really wants to move. There's no reason for a buyer to get off the couch and to go and take a shot. Now, that's bad news if you're a seller. if you need to get out. If you're living in one of these condos that's suffering from the changes that occurred as a result of the Surfside condo collapse back on June 24, 2021. Nearly 100 people died. $1 billion settlement paid out to the families of the victims. Everything changed in Florida as a result of that. Transparency was brought to the market, but also to mandatory inspections. Mandatory inspections done by licensed architects, licensed engineers are leading to all kinds of repairs being done at these buildings, which means what? The cost of condo living has gone up. And as the cost of condo living goes up, people are heading for the exits. They're leaving. They want out. Unfortunately, there's no buyers to step in and take them out. Why? We got high mortgage rates, and we got the concern of affordability. So it's all kind of coming together while we're standing there looking at this gray rhino, which is Japan, hoping that they don't sell their U.S. bonds because it's going to make it more expensive for the United States to finance more debt. $40 trillion we hit this week with our deficit. Some people say it was the war with Iraq. They say it's a war with Iran. They can say it's a big, beautiful bill. You say whatever it is. Ultimately, we owe a lot of money. We're not generating enough. And everybody's sitting on the sidelines waiting because of affordability. Affordability. So how does that all tie into where we are today? Well, if you guys go back to 2008, we had Lehman Brothers fail coming out of the summer. Well, September's typically preceded by August. August is that time when people go on vacation. They start to contemplate. As soon as Labor Day's over, you come out there running and gunning, ready to swing. And then down here, by the time we get to November, we get into the winter buying season, which will go from November to April. People coming to town, casual, coming here for an event, they're coming here for vacation, they're coming here to go on a cruise. They fall in love with it. They start kicking the tires. They ultimately end up buying. A lot of deals close in the summer buying season, which is going to go from May through October. So we're sitting here in August, and the stock market and the global economy is starting to wonder. They're starting to worry. Could Japan maybe sell off U.S. bonds that it owns, biggest foreign owner? Could they sell them off? And if they do, what's that going to do for mortgage rates? What's that going to do with car loans rates? What's that going to do with credit card rates? So this is the discussion that's going on right now as we speak, and we know it's real because Treasury Secretary Scott Bessent made a move this week to try to backstop Japan. So that needs to be on your mind. This is something you need to consider if you're in the housing market. Now, how does it work? If you're on the buy side, this is great news. If you are on the sell side, you better figure out a way to get through to the other side because you got some serious headwinds, especially if you're in a condo. And I know a lot of people say, well, listen, I'm in a single family house. I could care less. Well, let me just remind you. A lot of people who live horizontal, single family houses, they're making their money off the vertical, which is the condo towers. Maybe they're doing financing. Maybe they're laying tile. Maybe they're selling tile. Any and all of that typically translates to people living in houses. So as condos go bad, that typically has an impact on the horizontal living. When I look at the condo market down here in South Florida, Dade, Broward, Palm Beach County, I see a large trading pit. What do I mean by trading pit? Well, right now, if you're going to go and you're going to buy stocks, you're going to buy bonds, you're going to buy crypto, you get on your phone, you're opening up an app, and you're doing whatever you're doing. Back in the day, back then, you used to have a broker. You'd call that broker up. Hey, broker, I want to buy X stock. That broker would call down to the floor of the trading pit, of the trading floor. Person answered the phone. They'd write up an order, kind of like when you used to order like maybe Chinese food. You order a pizza. You call up, they write an order, and boom. So you call your broker calls the floor writes up the order. They give it to a person called a runner. Runner would take that order. They take it over to a trading pit, and in there you had people. Hands out, they're selling. Hands in, they're buying, and they're yelling and screaming. We've all seen it on TV. Maybe some of the younger people, you haven't seen it. Go back and watch a movie called Trading Places. Give you a real good glimpse of it. So when you look at the condo market in South Florida, this is a trading pit, everybody. These are not all family of four and a dog looking to live the American dream. These are speculators. They're coming in. They're trying to buy low and sell high. Inevitably, they do it the reverse, which doesn't end well for them, but it ends very well for buyers. And what kind of drives it all? It has to do with sentiment. What is the sentiment right now on the street? Well, sentiment on the street right now is the great rhino. That great rhino standing there just chewing. We don't know if it's going to charge. We don't know when it's going to charge. But if it charges, we might get some black swans, which is a thing nobody expects. What's a black swan? Again, it's something you didn't see coming. When the economy gets challenged, when you kind of rattle that cage, you don't know what's going to break. Remember, Lehman Brothers fails because of mortgage-backed securities, 2008. AIG, an insurance company, well, what does that got to do with it? That's an example of something breaking. And this is the part you need to be well aware of. So that's what we look at right now as we're in August. And I want to tie all this in, the current situation, into what's going on in the condo market, because that's something I do. Something I do. But before I do, let's see what Oscar has to say. Oscar, what do you think about gray rhinos? What do you think about black swans? What about vultures? What do you think about it, Oscar? Oh, Oscar ran out. He's using the bathroom or something. So let's go back and let's talk about where do we stand right now. Right now, in basically the third week or so of August, leading up into what will be Labor Day, September, and ultimately we're going to go into the winter buying season in November, which is typically kicked off with the Miami International Book Fair. Goes down at the Wolfson campus, down to Miami. Mitchell Kaplan and the county and Miami-Dade College, they've been putting it on for years and years and years. If you guys haven't gone, you need to go. It's an excellent event. You hear all kinds of speakers. You're able to wander around, do different things. But it's right around the corner, everybody. I was in the store. I'm seeing Halloween candy. Halloween's at the end of October. They're already putting it out. I don't know when I'm going to see the Thanksgiving stuff, the turkeys, the cranberries, the stuffing. Pretty soon, probably. But we're right now on the brink, going into September, Labor Day, and typically things will start to heat up. So let me give you a glimpse of where we stand right now in South Florida based on the condo market, keeping in mind the condo market translates into single-family houses because people live in horizontal, are making their money off the vertical, which is the condo. So I'm going to ask Rochelle to go ahead and show us the first chart. This is going to be the overall condo market. This will be Miami-Dade, Broward, Palm Beach County, as well as South Florida. So we got the overall condo cliff index, which you guys are looking at. So what I want you to do is just simply check it out. This is a storyline. When you guys look at closed sales data, which is reported typically at the end of the quarter, it's 30 days, 60 days, 90 days old, 120 days old, something that closed in July or August. It's not coming out till October, everybody. By the time October comes, the gray rhino might have charged. What good is it? So what we did is we created an index, a series of indices, and we track what's going on in the market. We're not looking at closed sales data, but we're looking at what's on the market and what is going under contract to get a sense. How is this thing sort of playing out? Well, we've been doing it since January 1st, 2025. We checked 23 markets overall. We look at another 23 markets on the vintage side. Vintage is going to be those condos that are under greater scrutiny. They're at least 30 years old. They have to do something called the milestone inspection. And when they do that milestone inspection, it typically leads to special assessments, which means the cost of condo living has gone up significantly. Now, all condos in Florida, as a result of Surfside, they all got to do inspections. They got to do them every 10 years. But when you hit the 30-year mark, you got to do an added inspection. Typically, it leads to real big special assessments. Our best guesstimate, if your building's up to 4 stories, you're looking at $25,000 a unit special assessment. If your building is between 5 and 14 stories, that's going to be $65,000 you should anticipate. Buildings 15 stories or more, $100,000 is what you need to put on the board. So if you're a buyer going in, and they haven't yet put in place special assessments, this is kind of a good rule of thumb based on our expertise, based on our experience, based on our guesstimate, if you will. Now, if you go into one of these buildings and you don't have the cash, well, condo association has 2 options. They typically give you a year to pay. If you don't pay, they foreclose on you, and or condo association can take out a loan. Typically going to be private lender, and that private lender is going to be hitting you at 9, 10, 11, 12% interest rate, which means what? The cost of condo living is going up. So this is kind of how it plays out. These are things you sort of keep in mind. So with our index, what I'm showing you right now is how it's playing out county by county by county. So what I want you to think about is the higher the chart is, the line, the better it is for the seller. The lower the line, the better it is for the buyer. And right here is a glimpse going all the way back to January 1st, 2025, when we said that the Florida Condo Association financial cliff began. What you're feeling right now, everybody, if you're living in a condo, that's what we call the condo cliff. You're doing everything you can to maintain it. The costs are going up. People around you are going bad. They're not paying. As a result, your condo association's either asking you for more or they're cutting services. That's the condo cliff. You're standing at the edge. You're hoping you don't go over the other side. So January 1st, 2025, we started tracking it, and this is what we got. So green is going to be Palm Beach County, black is going to be South Florida, blue will be Miami-Dade County, and orange will be Broward County. So as you guys check out this chart, you very quickly see green, which is Palm Beach County, is the best condo market in all the land. Palm Beach County, best condo market in all the land. They have fewer units, but also, too, they got the Mar-a-Lago effect. President Trump spending a lot of time practically every weekend. Palm Beach Island. He's going there, and what's happening? People want to be around him. They're buying up condos up there. Palm Beach County, best condo market, all the land. The worst condo market, If you're a buyer, pay attention. Broward County. Broward County is overwhelmed with older units. These older units are starting to really get deeply discounted. And as a result, you guys can see from the index, it's not performing well. Black is going to be South Florida, and then blue will be Miami-Dade County. You guys can see, as confident as we are in Miami-Dade County, as confident as developers are, as confident as sell-side agents are, that trees will grow to the moon, Miami-Dade County is underperforming South Florida. It's underperforming South Florida. This is week over week over week. Close sales data from right now, it'll come out in October. You guys figure it out there. This is a tool in order to track it. What they do on Wall Street is you look at unemployment data, okay? That's going to tell you where we were. That's what close sales data are. Everybody, close sales data tells you where we were. What we're trying to do is we're trying to model, basically, the Dow Jones. We all heard of that. The NASDAQ. We heard of that. S&P 500. We heard about that. Russell. This is what we're doing. We're trying to give you an idea where are we right now. So if you want to play the game, whether you're looking to buy or more importantly, you're looking to sell, whether you're a listing agent, you're a buy side, you're a regulator, you're anybody. This is just a real-time tracking what's going on in the market. And we can all see there, basically, we've been heading downward. It's slow. So the last 8 weeks, we have gone down 7 times in South Florida. 7 times. Doesn't look big here, but we got the pop or the little hole in the balloon, the little hole in the tire. It's starting to leak out. It's starting to come down. Now, as this comes down, we got a gray rhino standing out there over in East Asia, which is Japan. They're holding all this debt. If they decide to sell it, what's going to happen? U.S. interest rates are going up, and what do you think that's going to do for housing? Interest rates go up, housing goes down. It's already beginning the unraveling on the condo side, and people in single-family houses, you need to pay attention because the condo market ultimately impacts single-family. People live in horizontal. They make their money off the vertical. Think about it, everybody. What do we do down here for economy? Well, we use the sun, we use pretty people and illicit substances in order to bring people down. Then we sell a condo, and we do everything we're going to do. So that's something to keep in mind. So I'm going to ask Rochelle now to pull up a different chart. This chart is going to be the vintage condo market. These are the condos at least 30 years old or older. So we got that one up. Yep, there's the vintage. Now, what you guys will notice there, blue is still Miami-Dade County. Green is still Palm Beach County. Black is going to be South Florida, and Broward County will be orange. What you guys see here is Dade County, the best vintage condo market in all the land. Why? Because the cost of living in a condo in Miami-Dade County is so expensive. Many people are saying, you know what? Let me go after one of these vintage condos. Let me go after an old one. Why? It tends to be about 40% cheaper. 40. That's not, I'm not misspeaking. 40. Asking price on the way in. 40% cheaper than what we would call a modern condo. Well, a little bit more, but let's just say 40% cheaper. So what I would tell you is Miami-Dade County, people are opting for the old stuff. Why do they want the old stuff? Well, remember, you got mandatory inspections. Because of the mandatory inspections, licensed architect, licensed engineers, they check it out. They then give a sense, okay, what's the shelf life? How long is this roof going to last? What about the mechanical, the electrical, the plumbing? What about the facade? What about all that, the structural? Once they have that all done, they give it over to the numbers people. Numbers people figure out what it's going to cost to fix. Then that whole entire report, they put a bow on it. They turn it over to the condo board. 2026 condo board's got to start to pay for it. They got to take out a loan. They got to hit everybody with special assessment. And the work's got to get done. So what's happening is increasingly, because the reports are being done and they're being signed off on, and banks are providing financing and lenders are providing financing based on this report, what's happening is people are getting a sense that, hey, maybe a vintage condo is going to be okay. I mean, you know, you could buy a new car or you could buy a certified pre-owned car where somebody took a look at it, they gave you a warranty, they fixed the stuff. That's what people are doing, and they're opting. They're opting for vintage condos. So what I'm here to tell you is that condo that's modern, up to 29 years old, people don't want it. Why? It costs too much. They want the vintage condo. And you say, yeah, but Peter, I don't believe that. I don't believe it. Well, let me give you some ideas about vintage and why they are so popular. First and foremost, there's about 760,000 condos. Miami-Dade, Broward, Palm Beach County. 760,000, about 13,000 associations. 67% of all the condos out there, they're at least 30 years old, everybody. Now, you might not realize that, but that is a reality. So, but that still doesn't say, why would you want to buy a vintage? Well, let me give you 3 factors. Besides 40% price difference. Factor number 1, if you're going to live in it, it's much more space in a vintage condo. It's built up through 1996. As a result, 1 bedroom is going to be 1,200 square feet. 2 bedrooms, 2,000 square feet. You know how much a 1 bedroom is today? 750 square feet. What about a 2 bed? 1,000. People are saying, oh, it's 40% cheaper and I get double the space. I don't have to get a storage a slot or a little area now. People are going for vintage. Let me give you another reason why they want vintage. Better locations. There was more land to choose from at the time. Remember, up through 1996, more land to choose from. People like that. New condos going up, they tend to have inferior locations. And what's the third one? And this is a sleeper. And it doesn't have an impact on me because I don't have a car and haven't had a car since 2013. You get to self-park in a vintage condo. Building parking spaces for these towers is expensive, about $40,000 a space. Developer doesn't want you self-parking. They would rather shoehorn everything in. They'd rather tandem the parking where they go, basically bumper to bumper, and then they put a lift above it so they can shoehorn in all the parking. You need 1.5 parking spaces every unit. That's expensive. You're not making money on it as a developer. So if you can minimize the cost on parking, it makes sense. Now, they will peddle it to you saying it's a luxury. You're very special, and therefore you get a valet. In reality, it's a complete pain. You got to call your car in advance. You got to get down there, hope it's there, hope they didn't lose the keys, hope you didn't forget something and then have to get back in the elevator, go up, and then they repark, and you got to do the whole people like to self-park. You get it in a vintage condo. Increasingly, you're not getting it in a modern condo. It's just not an option. So people are opting for the vintage. So if we can go back to the chart, Rochelle, you guys will see what's going on. Worst vintage condo market, all the land, Broward County. Ding, ding, ding. Everybody you're looking for value, Broward County's got it. Make sure you do your homework, though. Miami-Dade County is the best vintage condo market. Green, you will see. Green is Palm Beach County. That was humming there for a while up until the end of the winter buying season, and now it's basically free-falling. Why is it free-falling? Well, I think a lot of people are increasingly moving to and catching the wave of the Mar-a-Lago effect because President Trump spends every weekend there in the power structure there. They're opting for the newer stuff. Newer stuff's becoming available. So best condo market for vintage, Miami-Dade County. Worst is going to be Broward County. Now let's talk about pricing. We're going to give everybody an idea what's going on the pricing side because I want you to be able to see it so you can go do whatever you want to do with this information. And keep in mind, people living in houses, they're making their money off the vertical, off the condos. Rochelle, could we show the asking prices for the overall market in South Florida? There we go. Not a lot there. We started tracking the numbers basically for pricing wise. We started tracking it in about April or so. And what you guys are going to see here is blue is going to be asking price for Miami-Dade County. Black will be South Florida. Green will be Palm Beach County. And orange is going to be Broward County. You guys can see best value on the street asking is going to be Broward County. Most expensive by far is Dade County, which again is why people want vintage condo. Rochelle, if we can go to the next one. This is what stuff is going. This is the pricing when a condo, which is listed for sale, when it goes under contract. This is what we got going on there. Green will be Palm Beach County. Blue is going to be Dade County. Black is South Florida. And orange is going to be Broward County. Now, what you guys should note is these are pending sales. So the condo was for sale. It then goes under contract. Ultimately, it'll close. This is the average price it was for sale at when it went under contract. Now, we typically say there's 20% fat or buffer on the asking price versus the real price. So when these things close, there's going to be some sort of negotiation that occurs. Nobody wants to pay full asking price. This isn't 2021, 2022, 2023, when Miami Beach permitted you to twerk on a police car on Ocean Drive. That's not the days. We're not going over and above asking price anymore. So these asking prices, basically when they went under contract. So expect those numbers to fall. But what you guys will all notice there, we're heading downward. This is before the gray rhino even started charging. Keep that in mind, everybody. This is when mortgage rates, remember, mortgage rates were 5.99%, 30-year fixed on 27th of February, day before the United States launched an attack against Iran. It sort of disrupted and rattled the cage. Now we're coming in at 6.7, 6.75. Keep that in mind, everybody. So something to pay attention to. So if we're already leaning downward, it should offer you some suggestions about maybe what trajectory we are on as we sit here in August of 2026. Rochelle, can we now show the, oh, you know what? That was pending. That's vintage pending. Can we go to the next one? All right. And now we're going to go to asking prices. Yeah, let's go to the vintage asking if we could. There we go. Again, this is what's going on the vintage side. Remember, 30 years old or older. You guys can see that Miami-Dade County is the most expensive out there. Black is going to be South Florida. Green is Palm Beach. And orange is Broward. You see how Palm Beach County is sort of losing it on the asking prices? Why are prices going down? Because people aren't making the offers to the same extent that the sellers need. They're feeling the pressure living in these condos. The average maintenance fee, everybody, if you're in a high-rise in Miami-Dade County, according to First Service Residential, which is a big property management company, $1.15 a square foot per month. $1.15 per month. You're not getting anything back for it. Basically, that's to maintain your kind of lifestyle. If you're in Broward or Palm Beach County, you're looking at about $1.02 a square foot per month. And I should tell you, about 20 to 25% of your maintenance fee every month, it's going towards insurance. It's going towards insurance. We can't discount that because of what happened in Surfside, because of the hurricanes that occurred a few years back. Insurance is still high. Now, it's come down recently, but it's still not below where we were prior to Surfside, June 24th. 2021. So keep that in mind. And as a result, people are trying to head for the exits. Rochelle, if we can then go to the next one, maybe I think it was pending sales for vintage. Yep, there we go. And then you guys can see what's going on. Now, what you will notice is on this one, remember, blue is Dade, green is Palm Beach, black is South Florida, and orange is Broward. What you're noticing in the blue line, which is Miami-Dade County, the number actually went up a little bit. Why would it go up? Well, I don't know yet. Could be a lot of people are going after these vintage condos, or more likely, you're getting better quality stuff that forever and ever and ever, the seller thought that they had gold. They thought one child was excellent at soccer. They thought the other child was on their honor roll. They thought their significant other was good looking. They thought they drove the best car. They thought they lived in the best neighborhood. And then they kind of had a moment of realization, come to religion moment, if you will. And now they start to discount the better quality stuff. And when they do, tends to be a higher price point. Because of that, it'll skew the numbers. These are averages. If you guys look at the median number, the one in between, it's going to tell a different story. So when you see a bump like that in a market, ask yourself, who is going to step forward and buy something in this market with mortgage rates coming in at 6.7, 6.5, 6.75? Affordability, who's buying right now? The only reason you're buying is you're getting a deep discount on a product, or I can't think of another reason. So that's what's happening most likely. We're seeing discounting on property, and as a result, you got movers moving in Miami-Dade County. And then, Rochelle, if we can go to the last one, I think it should be the last one. We're going to pull up a chart. Okay, here, everybody. Okay, hold up. Don't get too excited. This is not an accounting class. Let me just show you this. This is a week over week over week update as to what's going on in the marketplace. Okay, on the left, you're going to see the index. You'll see vintage, you'll see overall. That's going to lay it out there for you guys. You can see how the index is performing. Going back through April 29th, April 28th, end of April, basically the end of the winter buying season. This is what we've been doing this summer, everybody. This is how it's playing out. When you see violet or red or whatever color you want to call it, that means it's down. When you see green, that means it's up. It's up. And when you guys can see, like I was saying, the overall market, 7 of the last 8 weeks, it's been down. The vintage side, last two, vintage, remember, 30 years old or older, last 2 weeks, it's actually gone up. It's actually gone up there. So who knows? Maybe you're seeing some capitulations on behalf of the sellers, and maybe buyers are stepping up because of that capitulation. Now, what's interesting about this is look at the percentage drop. The percentage drop for the index since the end of the winter buying season. These are sizable numbers, everybody. As you move to the right, you're going to see the listings. Pay attention to the listings and how they are falling. Why are listings falling? A lot of people are pulling their listing off the market because they're sick of lowballs. Everybody's lowballing. The other reason that they're sick of lowballing is that they paid too much. They came in 21, 22, 23. Now they can't get the price they need. They can't get out. So what are they doing? They're saying, you know what? Let's take off the summer. We tried the World Cup. Even though World Cup was here for 6 weeks in South Florida, hosted in Miami Gardens, Hard Rock Stadium. 7 matches, 450,000 attendees at those matches, plus everybody else who came. Condo sales went down. Pending sales went down immediately. Now, 3 years from now, some developers will say, well, during the World Cup, somebody came in and then they bought 3 years later and it's all because, don't believe it, everybody. The immediate response is sales went down. Why? Because people were so fixated on the matches, which we predicted, as well as the affordability price. The issue, everybody, is financing. It's pricing. This is what's holding back the market. It's holding back the market. The industry will tell you it's a healthy rebalancing of the market. You know what that means? That means we're cleaning up and we were way too high, and now we got to come down to get more. So in the reality, January 2025, we called for a 40% price drop. 40% price drop. It's slowly moving that way, and we're standing by our call. If anything, we might double down and say it's too conservative based on what we're seeing. But you guys can see what's going on in listings. Then we'll jump over. Take a look at pending sales. You guys can see what's going on the pending sales side. They're coming down. Basically, what should be happening is if there's less units, then you would think the buyers, if there was interest, they would be, they'd have less to choose from, and therefore they'd step up. Instead, the buyers are sitting on the sidelines, and the sellers are annoyed because they're getting lowball offers, so they're pulling it off the market. So we are just sort of contracting, and it's all just building. Months of supply, which is a good indicator about, where the market stands. 6 months should be equilibrium. Less than 6 months is a seller's market. More than 6 months is a buyer market. We're in a buyer's market, everybody, and based on price points, you will get into an illiquid buyer's market, meaning there's no market. Brickell Avenue, over a certain price point, $5 million. There's no market. They're not selling. Fisher Island, everybody likes to talk about Fisher Island. It's so big. Nothing's trading, everybody. Everybody can put their place for sale. Good luck transacting in a climate like this. That's the part you need to be well aware of. As we go to the right, you're not going to see the average asking prices for these condos, both on the vintage side, which is at least 30 years old, as well as the overall market. And then finally, you go over to the pending sales price. This is the average price when these condos went pending sales. All there for you guys to see. This is what's going on 16 weeks, summer buying season. Rochelle, if we could take that down, and then we will wrap this up, this presentation, where we're talking about black swans, gray rhinos, and vultures. What are vultures? Vultures are basically a term comes from Wall Street. You got a venture and you got a vulture. If you were positive and long and thinking prices are going to go up, you call yourself a venture investor. If you think the market's going sideways and you want to take advantage of somebody who was drinking a little bit too much of the Kool-Aid thinking that trees are going to grow to the moon, you call yourself a vulture investor. So what would be some examples of that? Well, you get a guy like Warren Buffett. Warren Buffett is a venture investor. He goes long, but he takes advantage when there's opportunities out there. He's got a saying, you don't know who's swimming naked till the tide goes out. So he goes long and he takes advantage of opportunities when they come up. Then you get a vulture investor, a guy called Sam Zell. Sam Zell was a real estate investor out of Chicago. And what he would do is he would go in and take advantage of situations. And that's kind of the situation we're in right now, everybody. So a vulture investor takes advantage of a downturn, doesn't kill the market, but it cleans it up. And a venture investor sort of goes long. So where do we sort of stand here as we are in August? Well, our summer buying season was supposed to be a time we were told that the World Cup, 6 weeks, 7 matches, 450,000 attendees, were going to prompt sales. They were going to spur sales. They were going to bring us back because we're in a buyer's market. And you know what happened? Pending sales went down. Listings went down as well because some sellers, we would argue, they're getting so disappointed by the low balls. They're like, you know what, whatever, we're going to come back. We'll come back and we'll market again after Labor Day. Because we all know down here, May, June, you do what you do. July, it starts to slow down. August, everybody goes on vacation. Go on vacation because your kids are going back to school at the end of the month. We got hit with a separate one this month, though, or this year. Fannie Mae, secondary buyer of mortgages. Bank makes a loan, everybody. They put a spread on it. As long as the loan meets certain criteria, the bank takes it and sells it to Fannie Mae. Fannie Mae gives them the cash back, and now they can go out and lend again. Fannie Mae's got certain regulations that they want, and they'll buy the loan. They're like I don't know. They'll take anything you got as long as it meets the standard. Fannie Mae announced and put into place August the 3rd, they're not allowing limited reviews anymore. So what does that mean on condo associations? What does that mean? Now every mortgage application that's going through for a condo, they got to do more homework on it. They got to check the numbers. They got to make sure everything's on the up and up. You can't just fast track it. These are not the Lexus lanes on I-95. This is being stuck in traffic at 4 o'clock trying to go into Broward County from downtown Miami. And what is that going to mean? That's going to mean higher costs, take longer, and a lot more people reject it, which means you got fewer buyers buying the condos. At the time, sellers need to get out. They need to get out, everybody. So that's what we had kick into effect August 3rd. Now, typically what happens is August is dead. You got the Labor Day holiday, first Monday in September, and then after that, the market starts to heat up, and we lead into what will be the winter buying season of November through April. This year, though, however, we got a midterm election coming up for the direction of Washington. And as a result, sometimes buyers sit on the sidelines and they wait and they're not sure and they want to see what direction Washington's going before they go forward, like when it's a presidential election. We suspect that's probably what's going to happen this year. We suspect probably going to be a lot of people on the sidelines waiting to see how Congress shakes out. And as a result of that, probably the next opportunity for sellers to get out is probably when we're talking about turkey. We're talking about stuffing and we're talking about cranberries, and that would be the winter buying season in November. So I guess what I'm saying to you is as we sit here in August, everybody, if you are a buyer, you probably got a window where nobody wants to dip their toe into the water because we got a gray rhino that's chewing on some whatever rhinos eat. And that gray rhino is Japan. It's Japan. And remember, once the rhino charges, we might get a black swan. We might shake something out and something breaks that we weren't expecting to break, i.e. Lehman Brothers failure September 2008. Leads to AIG. Remember that, everybody? AIG, the insurance company. And then finally, the vulture side is the cleanup. It's the cleanup. And, you come in and you buy. Now, if you're on the sell side and you can hold firm, hold firm, hold firm. But understand, the value you thought you had from 2021, 2022, 2023, it's probably not there anymore. It's probably gone. It's gone the way of the mask. The mandated mask requirement. It's a different market today, everybody. And people are sort of trying to figure it out. Now, a lot of people are making money on Wall Street right now with the stocks. They're doing well. They're feeling good. But how are they feeling on the street? A little bit different vibe. Remember, stock market is not the economy. Two completely different situations. And these are things you need to keep in mind, whether you're playing the real estate game, or you're just trying to survive, you're trying to do anything. We got a bunch of different stuff shaking out. Home Depot, they sell supplies. They are a good indicator of what's going on. They're saying sales, not so good. These are all things you guys need to keep in mind. And then very soon, we're going to start talking about the holiday season, what people are buying, what are they not buying. So we got all kind of coming to a head at this point. So we would say buyers, you probably got about a 90-day window or so until people get back in the market. And then sellers, you basically got to get through to the other side. The challenge you got, though, if you're trying to sell a condo come November or so, when the winter buying season begins, the weather changes, it becomes dry and fantastic and all the events are planned. Problem is the condo associations start to pass their budgets. They announce their budgets in November and December that kick in January. So the cost of condo living is likely to go up. And when the cost of condo living goes up, basically you're probably going to get less money. Why? It's just the way it works if you got an investor. And final tidbit I would sort of throw out there, if you guys want to get a sense, what is my condo worth? What is my single family house worth? Pertains more so to condos. What's my condo worth? Real simple, fundamental way to do it. It's called the 1% rule of real estate investing. Take out your phone, get on your computer right now, look up 1% rule of real estate investing. Real simple. 1 month of rent represents 1% of value. $1,000 a month in rent means your condo's worth $100,000. $10,000 a month in rent means your condo's worth $1 million. $1 million. So everybody should ask themselves, what can I rent my condo for? That's the value. Is it a conservative approach? Yes. But it's the type of approach investors use, as well as private lenders. You used to call them hard money lenders, but private lenders. Why? Because it gives you some sort of reality check as to what the marketplace is. Not the appraiser, but basically, you might buy a condo and might be your forever condo, just like a lot of people from Wall Street did and Silicon Valley people did. And then they got called back to the office. Now they need to rent it. And what they're finding is that their burn, their carry every month is, $8,000, 10 grand with property taxes and maintenance fees and debt service and everything else. And they're getting $3,500 a month in rent. They're upside down. So they are subsidizing tenants to live in their properties. By the way, if you guys didn't notice, during the pandemic, interest rates were very low. As a result, a lot of real estate investment trusts, corporations, they build a ton of rental units. These rental units, they're starting to get very creative. They're putting incentives to rent. I did a report probably 6 to 9 months back. We were shopping rental buildings. Down here, the standard is to rent first month, last month, and a month of security. That was the norm. Today, pay the first month's rent and give us $500 security. Why? Because they need people. They need butts in the seats, if you will, in order to kind of make it happen. So this is all the downward pressure that's out there. And, it can be a challenging time for people. But I would just sort of tell you, as you guys kind of plan out what you can do as we get into the fall, be aware that there's a gray rhino standing there. And that gray rhino, which is Japan, it's nice and calm and chewing right now. And Scott Bessent, the Treasury Secretary of the United States, he's making sure that the gray rhino doesn't get upset. Because if that gray rhino charges everybody, that might lead to a black swan, and a black swan might ultimately lead to a vulture who's out there looking to take advantage of the opportunities that might be on the street. So my last thought, everybody who's complaining they missed out, the FOMO, oh my gosh, I'm never going to be able to buy a place. It's coming. Why? Because real estate is cyclical, everybody. We've been on this run since 2011. We started cleaning up in 18 and 19. At the time, Jerome Powell was the Federal Reserve Chairman. President Trump jawbone president or former Chairman Powell to cut interest rates. He did. It provided a bolster to the condo market in South Florida. Then what happened? Pandemic hit. Prices fell. Then Governor DeSantis said you don't have to wear a mask, and everybody flooded in here. Some of them wanted to work on police cars too, so they came and they bought condos. They flooded in here. We drove up the pricing. We have not corrected properly since 2011. Real estate cycle is typically 7 to 10 years, everybody. So take that for what it's worth. But if you thought you're never going to have an opportunity to buy, I think your opportunity is coming. Now, financing might not be readily available, but keep that in mind, everybody. So that's where we stand here at the end of August, 2026, on the brink of going into September. And I wanted to share that with you. But let's see if Oscar has any parting thoughts. Oscar, you got anything to add to that? Did I miss anything about the gray rhino or the black swan or the vulture? I miss anything? Oh, Oscar's finally quiet. He's never quiet. I don't know where he went today, why he's not here. You know, word on the street is he had a Dungeons and Dragons convention or something. He's really big into Dungeons and Dragons. I'm joking, of course. But we're going to have Oscar back next week, and we're going to be back next week. And you know, if it's Thursday, we are talking about what's going on in South Florida. Is it hyperbole or is it reality? And we do that on Miamees on Fire. We always broadcast live from South Miami, the headquarters of Miamees Community News. Shout out to Michael Miller, co-publisher Grant Miller. Come on down here, check out the facility. Ask for Grant. He doesn't do anything all day. He'll give you a tour of the place. You guys will absolutely love it. Get involved with Miami Community News. They do a whole variety of events. They also provide podcast studio if anybody wants to do it. So thank you, everybody, for tuning in. We're going to see Oscar next week. Remember, it's Oscar Musibay, Lee and Associates, commercial real estate agent. I'm Peter Zalewski, condo consultant, expert witness, founder of the Miami Condo Investing Club.